Before going through our contents, please pause the video and read the disclaimer. Today's video is on how pips are calculated. To get started, we need to know what is a pip. Pip is an acronym for percentage in point or price interest point. A pip is the smallest price movement that an exchange rate can make based on forex market convention. Most currency pairs are priced out to 4 decimal places, and the pip change is the last decimal point. A pip is thus equivalent to 1/100th of 1% or 1 basis point. Now, why understanding the pip is important? As mentioned, pip is the price move in a given exchange rate. Understanding the change in value helps traders to enter or edit orders to manage their trading strategy. How does pip work? For instance, for a trader to say, "I made 40 pips on the trade," means that the trader profited by 40 pips. The actual cash amount this represents depends on the pip value. The monetary value of each pip depends on 3 factors. 1. The currency pair being traded. 2. The size of the trade. And 3. The exchange rate. Based on these factors, the fluctuation of even a single pip can have a significant impact on the value of the open position. For example, assume that a $300,000 trade involving the USD against Canadian dollar pair is closed at 1.0568 after gaining 20 pips. Calculate the profit in US dollars by completing the following 3 steps. Step 1. Determine the number of code currency each pip represents. Multiply the amount of the trade by 1 pip. Multiply 300,000 with 0.0001, and that would be 30 Canadian dollar per pip. Step 2. Calculate the number of base currency per pip. Then divide the number of Canadian dollar per pip from step 1 by the closing exchange rate to arrive at the number of US dollar per pip. That would be 30 divided by 1.0568, which would equal to 28.39 US dollar per pip. And finally, step 3. Determine the total profit or loss of the trade. Multiply the number of pips gained by the value of each pip in US dollar to arrive at the total loss or profit for the trade. Multiply 20 pips gained with 28.39, which would equal to a profit of 567.80 US dollars. Pips and profitability. The movement of a currency pair determines whether a trader made a profit or a loss from his or her positions at the end of the day. A trader who buys the euro against the US dollar will profit if the euro increases in value relative to the US dollar. If the trader bought the euro for 1.1835 and exited the trade at 1.1901, then the trade would make 66 pips on the trade. Now, if we consider a trader who buys the Japanese yen by selling US dollars against yen at 112.06, the trader loses 3 pips on the trade if closed at 112.09, but profits by 5 pips if the position is closed at 112.01. And that is all for today's video. Thank you for watching with halalpips.com. Share your thoughts and ideas with us in the comment section.